And good morning. It's the 11th of January, 2024. It's 10:49 Central Standard Time. I missed all of the open action being otherwise occupied. And I was tempted a couple of times to put a trade on as I was monitoring out of the corner of my eye, but I want to be vigilant in only having trades taken while on stream so that I have the proper journal of that. Now, pretty obvious what's happened here today. Big drop on the number. VPOC shifting down. We're now trading up here to where it might be considered a mean reversion trade, which we've had several of. Jump over here quickly to the Renko, and it's pretty obvious what's happened. There's a bond auction, the 30-year bond auction coming up, which I believe about 1 o'clock. I'm going to have to enable this other machine, the trading machine, so I can look at these things. There were a couple of big numbers out this morning. 7:30 was CPI, initial jobless claims. There's an FOMC member speaking at 11:40. The 4-week bill auction is at 10:30. And the 30-year bond is at 12. And some more talking Feds here after that. So, yeah, pretty. But basically, there's been quite a great volatility in market. We've taken out all the usual suspects, the IB30, the IB stat. And this is kind of setting up for a mean reversion trade, and I'm a little bit late. But I'm thinking maybe this is a good trade to enter here at this time, even though my entry point is a bit late. On second thought, no. I'm going to be vigilant with my discipline here. This was conceivably exhaustion, 439 out, 1. Now that's not very good way to look at it there. Up here at this level, which is the top or this low volume node just below the full session Globex low, developing volume, and I'm going to trade through this and head back down to the lower numbers there, it would look like to me. So there was a missed opportunity. Late to the party getting the stream set up. I started looking at this up here when we tested into this liquidity. Whoops, what's going on here now? That didn't work like I had it planned. Yeah, so there was a good mean reversion setup from the low. Mean reversion up to the low volume area here. Test back up, still too high, and down for almost 10 points, 8 points. So excellent swings and good risk reward, and good range or meat on the bone, so to speak. Now it's no good because we're right at the bottom. So this would be looking for a breakout of the lows to get any kind of meaningful traction. And that's pretty dicey. Not a high probability, and picking a low is not a high probability trade. However, we have been mean reverting. And if we get back down into this low area over here, it's quite possible for an asymmetrical trade. The problem is, in this context, it's only shorts, right? The context of the market is down. No question about it. And it's almost a trend day with 1, 2, 3, 4, 5 distributions. So a long would not be in my trading plan because it goes against the context or the, advancing army. This is counter trend, and that's not a good plan for long-term profitability. These being able to not focus on these mornings is frustrating, to say the least, especially with these big movers. But I wanted to get a stream on here with a bit of narration to keep my wits about me. The big problem with these is with days like this, you got to be so vigilant against FOMO, right? When you stand and watch these lows be taken out, the IB 30, then the IB, then the low extensions, and a couple of mean reversion trades from around this distribution. VPOC migration down, all of the key primary triggers or setups, I guess you'd say. Got to be real vigilant against FOMO, and then do something stupid like trying to pick a bottom and go long against the context. A lot of people, if that's part of the trade plan and they want to go mean reversion up and down around this distribution, that's perfectly fine, and there's basically enough meat on that bone to get to make it worthwhile. But it's just it's counter rotational trading against the trend or the context, so I don't think it's a good idea. And I will have looked at entering here, of course, and talked about it, and then the damn thing will go up 150 points, or it'll go up and check the POC again, which is up here. So, for every time you open your mouth about a rule or the way you think, there can be something contrary to that. So you just have to come up with a plan and your basic thinking and the structure of your plan off of a trade, outside of trading day, and then stick to it when you're involved with the market. And I'm not going to be taking longs against this big downtrend. I am going to put on the Be Right Back music and make sure everything's working here. Oh, yeah, there we go. And of course, further lows are not a very long, don't have a lot of range. If you call this a pullback to this small low volume area here, this microstructure, what have you got? 79 to 76. You got to get all the way across it to scale. And then you're looking at trying to take out a new low. But you've got this, it is 4 points. So you could be scaled ahead of this high volume node and this liquidity. But look, we've been bottoming right around 6, right? So that's, I'm not good enough to get it execution and get right on the high. I'm going to be in around 8. So that's only 2 handles, and that's not a scale. So right now you're in jeopardy with a stop hanging up there. Not for me. That's not a big enough pullback. Of course, this is another story. pull back to this liquidity, pull back to the low volume area, mean reversion off the bottom up, and then mean reversion down, which is where we are. And, from 85, so you're at 10, almost 10 handles down, clearly scaled at 2, way up here. And this is you're just would be in a situation of trade management now, pulling the stop down above these swing highs to enable locking in the profit, or leaving it at scratch and let the chips fall where they may. Target would be this liquidity right here. Had I entered up here, this liquidity in the high volume node would be the target. I'd be watching it real closely, and when we get down around here, I'd bring the stop up to lock that in, and maybe move the target down to the previous low to see if they get lower and want to go down and test the micro composite VPOC. That's that is all possible. And if you look at today's trade on the micro composite, there's yesterday, here we are today, just peeking down there at that VPOC that I just mentioned. So, yeah. And here we are up again, right? Could well be a sucker trap where they're trying to just normally I would say it's a retail trap for longs, but as you got to imagine that every time this has come down here and headed up, there's been somebody going long. So there's a whole bunch of stops living right below this liquidity, in my opinion. And that's a lot of fuel for a higher time frame to ignore. Plus, if they get a squeeze going, look at what today has been. If they get down here and get all those stops, those are buy stops, which is fuel to the upside. And then they can, they got squeeze city possibility. Interesting scenario to watch. Just frustrating to be only able to come in and narrate after the. I guess it's probably psychological, but I feel like the most opportune trading situations are presented to me in the first hour and a half or 2 hours. Those are the setups that I do like a lot. The IB30, the IB stat. Where was this? About 10 o'clock was this VPOC migration down. Let's see what that looks like here. Oh, there we are. Yeah, so you see, this is a real classic TLab structured trade. There's a VPOC migration down. Tested above it, couldn't get anywhere, came back up and tested right to it. That would be hit into that short anywhere in through here. And where'd you go? You got from 90, 76, 15 or so handles. And no possibility of heat or, jeopardy at all for your stop. And probably the thing for trade management would have been, had that been the entry, was to pull the stop trailed up here above this swing high, and above this liquidity. Now that is 5.5, 5 points. So that's not much profit, and you'd be giving a lot of it back. But that's one of the things that you need to vet. And quite frankly, I'm struggling to do it. There could be so many maybe I'm being too precise. I don't know. In my opinion of statistics, you cannot have a handful of variables and still have a statistically significant data set. If you have 20 trades and 5 of them have a 5-point stop and 4 of them have a 2-point stop and 6 of them have a 20-point stop, you can't include any of those together in a data set, for example. So the same would be the case with to a certain extent, the same is the case with trade management by trailing up a stop to swing highs. In order to have a data set be statistically significant, there can only be essentially one variable, really. And that's the way the homework stat works. The only variable is the open type. Is it lower in range, higher in range, higher out of range, higher in range, lower in range, or lower out of range? If it's one of those 4 instances, then the statistics are calculated for each one of those 4, and that's it. Has nothing to do with the context of the day or any of that other stuff. So maybe I'm being too precise about it, or whatever the right word, the right word would be. And I've actually been reviewing some statistics courses to try to refine my thinking on that, because I really want to get this statistics nailed down for the vetted trades and trade management system that I will then follow automatically. If it hits that trigger and that target and those conditions are met, boom, away we go. And I know that I know that there is a positive statistic or positive edge for that setup, then you have to take it automatically. It's the Las Vegas gaming analogy. They have figured out the stats and the positive edge around each one of their games and the specific set of rules that provide or produce that edge, and they don't ever vary. Somebody wins a bunch of money on a hand, they don't change the rules. They just deal another hand. And they know that over time, the trick is, or the key is, the more instances of that particular setup you have, the higher the amount of edge will produce for you. That's not said very well, but the edge will manifest itself and dollars will come across the table. And that's how it works. That's how the trading business works. It is strictly statistical. It's got nothing to do with gambling or execution is kind of important in the fact that you need to, be able to do it and understand what you're doing. And but the real key in the beginnings anyway is to collect statistically significant examples within a certain subset so that you can vet a trade specifically. Now, sure, an IB30 trade could be, you could have a edge of, say, 15% in an up context or, whatever, 10% in a down context. But you know that you need to know what those percentages are, and that most importantly in any of those contexts, or that you have a positive edge, or you damn sure need to know in which context you don't have a positive edge and you stay away from that trade. It's not part of your trade plan for that context. In my opinion, the context has to be starting from the top down, right? What is the context of the market? What was the overnight like leading into the RTH session? What's the context of the market in the RTH? And then how do those metrics, or how does each one of the setups perform? What's the edge around each setup in each one of those specific contexts? And since we have a statistic for the open type, that's where I will start. I mean, that's my thinking. And unfortunately, I've only really gotten my head around the fact of the statistical importance of trading, or the fact that the trading business is really only statistical in recent couple of years. after all these years of trading and thinking, I had an edge with market profile or whatever it was. In reality, it's statistics. And I should know that because I actually have a interesting webinar from the Big Mike trading place, whatever that chat room or whatever it's called. A webinar put on by FT71, Murad Askar, back in 2016 or 17, maybe, about the importance of statistics. And he actually pulls a data set from IRT, which is a charting software I use, and demonstrates how to calculate the overnight high, overnight low stat on that exported data set in Excel. So, bad on me for not realizing what I really needed to do to extract the metrics and the data to vet setups. But, better late than never, right? Let's hope. So far, the IB30, the IB, of course, the overnight high and overnight low, and the VPOC, previous VPOC, or EVPOC stats are all big E's, and experience suggests that they definitely have an edge, but I want to be sure I've got the data to back that up. So that's what I'm doing. I have and the purpose of the stream is my video trade journal in the process of this collection of data and my trading, so I can hear what I'm thinking and see what I'm seeing and analyze that after the fact, after the heat of the market has gone away. I use, because I'm a Jigsaw owner, I've got a journalytics account, so that automatically captures the rhythmic data and trades and calculates all the stuff they calculate there. And I have Rhythmic set up to export the trade data daily from my trade machine to another one via Dropbox to a spreadsheet. And it appends, so I have a running record of all the trades taken for, I don't know, a year or two. And each day that data is then appended into an Excel database, on-site Excel database that I have, where I'm able to filter for context and open type and context and setups, obviously account, and look at the statistics and the metrics around each one of those things, each one of those setups in those contexts. And I think I'm on the right track then to having an edge established, or being able to establish an edge under specific criteria, or I guess that's the right word. So that's that. I can't demonstrate that or show those journals on this stream because I have no Office products on my trade machine. Just Windows 11, Chrome, IRT, and Jigsaw and Rhythmic. And you can see that, and a OBS, of course, and the Logitech G Hub for sound stuff, audio and visual and video. But I don't have Office or Excel or anything on this machine. Now we're approaching a spot where we might be, we've pulled that POC. We're back up to the VPOC here, approaching it. We're kind of into this very light trading area where we might see a rotation down to this liquidity. However, we are now going into the approaching the lunch hour, which is always scares the hell out of me. Keep this dialed in so I can sort of get some sense of scope. Well, there we go. Get some scope and be able to see these targets. What a lovely mean reversion trade back from the low straight back up to the top. So much for my only taking shorts. And now we're right at the IB low. So this could be an IB. This is the IB low. This could be an IB continuation trade where we've come up and tested it from below, and they may want to sell that down. The only issue about that is we have the POC just above up here, 5 handles, and there's a lot of fuel up there quite frequently. Depending on the time of day, these guys will take that down. Here we tested the IB before and sold off. Very likely we're going to do that. Now, if I had a vetted statistic that said I have an edge on IBC trades in this particular context, when the market is down and the way it should be, the market is down and you're below the VPOC. I mean, those would be parameters that should be involved in that. Then this would be an automatic trade to take. We came up with 179 stops here, came back with 9, then we came back with 5, showing signs of exhaustion. 6, now we go 10, right? Now the buyers are kind of coming in and hitting at it a little bit. So does it want to go down now again, or does it want to go up? And I don't have confidence in the statistics to put a trade on, so I'm not going to put any revenue at risk at this point. I'm pretty gun shy around the 12 o'clock area. It seems to me volume drops off a lot, and there's a lot more fluctuation and manipulation, maybe, in that market in this time frame. So assuming that I hit in short up here on these buyers or sellers, I'm sorry, I would be at about 85. So I need to get down around 3 or 2 in order to get scaled. That hasn't happened. I'll be right back. And so what's happened here? Well, couple of tests up to that IBC trade. And that would have been fine. We're at 81. Now's a bad entry because it's chasing. But working out good now. Any one of these tests, or if you want to get real technical, this one. And maybe I need to be more flexible in my risk neutral setup. For example, if I get in right around here at 85, put the stop right above here, or maybe just above that liquidity at that high volume node at 87 rather than 3 points, put it at 2. Then you have to adjust the target for scale to be risk neutral. Yeah, there's so many. Maybe I need to figure out about AI, but so many variables and configurations to try to get them weeded out is daunting. So, excuse me. This is a classic TLab IB continuation, in this case IB low, because there's the IB low, been set since 9:30. Come up and test again, and then fell off. Now we're coming up to it again. What are you going to do here? I always have this nagging feeling that I'm late to the party or jumping on the wagon afterwards. Like, okay, how many times can you come? Somebody used to say, how many times can you drink from the well? So that's been, 1, 2, 3, 4 times maybe. This being the only real, I guess, qualified mean reversion trade down to here from there that had a meaningful range. But that's only 6, 7 points. So not that that's sneezing money, but it's pretty close. I'm hopeful that all stream parameters are okie dokie. It appears so. One of these times they're going to come running up through there and then probably just blast off. If they get the squeeze going, then that'll be a whole other story. Here we are today, sold down, took out the IB high right there. This was the IB 30 where it extended. Now we're past 9 o'clock. The IB sets at 9 o'clock. So we're over here in the 10 o'clock range. Where'd I go there? There I am. 10:13. So this is the IB status set. Tests up here and then continues. Down, up, continues, up, little less. So we're getting lower. We're getting higher lows and kind of even highs. Is that a bottoming sign? I don't know. Is there anything to look for on the bigger picture? Well, let's see. There's yesterday. We're considerably below that. We haven't tested day before yesterday's lows, but close. This is the value area, which is kind of arguable because it's 1, 2, 3, 4, 5 distributions, sort of typical of a trend day, price discovery. What I see on the microcomposite is that this is the microcomposite volume point of control, and we're just a couple of blinks above that. That might well be a test. And that microcomposite VPOC is right here with the high volume node and the liquidity, you know. What they seem to be doing is coiling, right? Bigger swings, smaller, like winding up a spring. Whichever way it pops is the way it pops. If you're a technical analyst, this is kind of looking like a bear flag because it's building to the bottom. It's flat on the top and coiling up, conceivably break lower. I think is how that works. I don't really, not a technical analysis or technical analyst in that regard. So anyway, this is interesting data and interesting. The purpose of this at the moment, at this point in time and this time in the day, is to narrate what the market's doing continually. We're testing this IB continuation trade once again. That was viable with a reasonable amount of meat on the bone. This not so much. 4 handles though, that's still okay. You would be scaled right about here with a risk neutral configuration. I'm just apprehensive around the noon hour. I see a lot of counter rotation moves and jumping and jerking and carrying on. Also, when the hell did Europe close? Forget when Europe closes. 10:30 Eastern, I think, which is 9:30 here. Yeah. These are extremely. Actually, the market is moving extremely well and in a short configuration, which unfortunately suits me right down to the ground, but I'm only able to start watching it seriously after things got over with here at about 10:46. So from here on, I just had to keep my eye on this and be awfully disappointed that I wasn't involved. The IB continuation right here was a classic setup or a TLab setup. TLab is it's a bookmap Discord trading room set up by a guy named Tom B, who in my many years of doing this is probably one of the straightest shooters I've ever heard on the internet or anywhere. He's the real deal in the sense that he's a commercial, professional trader. Has been doing so for like 44 or something years. It started way back when, 80s, I think he says. Isn't selling anything. That's probably the key. Has a lot of real good, valid comments and theories, or at least they resonate with me, and they, I share many of them with him. So I guess that's probably why I feel the way I do about it. But he also streams an hour and a half every day, usually starting at 10:30 Eastern Standard Time, or Central Standard Time, sorry. And it's the bookmap Discord Traders Lab. The guy's name is Tom B. It's free. You don't have to be a Bookmap subscriber. So I definitely would suggest that that's something to listen to if you don't already. And the link to that is in the description below the stream. You have to, sign up to the Discord Bookmap, the Bookmap Discord room. But other than that, then once you go to there's no, nobody's pimping you or trying to sell you something or whatever else. It seems like a straight up deal. And for sure, Tom is straight up. I'd be just flabbergasted if he was a BS artist somehow and I hadn't figured it out. And I'm quite certain that that's not the case. So I am sort of disappointed that I don't really have proper statistics gathered for these IBC, IBF trades yet. But as I said, I capture them on Journalytics, and then I capture all the trades data is automatically exported from Rhythmic to another machine, and I upload the data or append the data into a on-site Excel database, which provides a full filter capabilities and all the metrics and calculations required to vet trades by open type, context, setup, and then other filters you can add manually. But those are the basic filters on the main page. The idea of which is to be able to see what the win rate, the loss rate, the expectancy, all of those things are for each setup under each set of context. I think that's the way it must be done to have verified edge. And then you just take the damn thing every time it manifests and fall into that casino model, which is to keep the rules absolutely constant and trade every time that presents itself, in which case the edge will manifest in terms of dollars in the account. It's a business, and trading is definitely a statistical business, having nothing to do with gambling or swatting trades on like you're killing snakes, which some folks do, and successfully too. That's, nobody says there's one way to do this, but I firmly believe that if you want to be in it long term and you don't want to be a part of the day trader statistics where over 95 or something % of people fail, you have to treat trading as a business, not a video game or anything else. And you realize that it's a statistical business. So you collect your stats properly so that you have a statistically significant data set, which verifies whether you do or do not have an edge and how much that edge is, 60%, 60-40, whatever the hell it is. And then once you have established that, the open type or the context, however you want to phrase those things together, and that trade presents itself under those circumstances, you take it. And over the long haul, the idea then, like a casino, is to take 1 million trades, and the data set is 1 million instances, and, whatever your percentage is of that total number is what your profit factor is. I believe that's the case. And somebody that doesn't ever listen to the news or look at reports and has never clicked at a stat and says they short by the seat of their pants, probably making more money than me, and good for them. But that's where I'm comfortable thinking and believing what I do. And fortunately, other people agree. Tom B., for example, and several other people in the Traders Lab. And other places I've been, FT71 and guys like that are, not just fly-by-nights. the software here, in case anybody breezes past and doesn't know, is Bookmap. And the charting package that drives the statistics and pushes these levels is Investor RT by Linsoft. That's what's over here. This is a Renko of the ES, Renko of the NQ, a market profile of the ES, and the micro composite, which is a regular trading hours or the day session, ES, day bars. And that's what the micro composite is. No indicators, only, I guess the closest thing to an indicator would be VWAP, which I do use and like. And then I have the mid plotted, and I have POC, the volume point of control. And this blue line here is a correlated market that shows the movement of the NQ, which oftentimes can lead the ES. And if they have a divergence, then that's time to be paying attention also. Well, they seem pretty happy with that 79 area. 79.80 seems to be this low volume node here. So it's just a real small mean reversion around here. This original IB low stat or IB continuation, where they came up and tested from below and then went back off. They weren't able to get over it and head back up. It's just a consolidation now, and it's going to pop one way or the other. And which way is that going to be? You can see here on this one, it's just, just winding that spring up tighter and tighter. Now they're basically cutting a zipper into it over here. And whichever way it pops, it's going to pop. And perhaps it's popping up already as I speak. And that's 80 to 84. So that's 1 point over the scale. And that's, if you're risking 3 to make 3, that's not a very good long-term strategy. You've got to be consistently, the risk reward has got to be consistently more than that. And I've struggled with that, trying to get my head around this new risk neutral idea and stuff. So I'm not saying that I'm working. There are guys on the Trader Lab, Tom, and a guy named Rod or whoever else. And if you believe what they post, they're smoking. They're hitting into shorts up in here somewhere when this starts selling off and scaling and doing a bunch of stuff. So, and I believe that it can be done, and I don't believe that they're lying. Why lie about it? And, there are people that do lie about it. But I mean, if you post something like shorted so-and-so because da-da-da-da-da, or, then it's reasonably worth believing. Here we go. Over that IB high. Now are they going to get a squeeze on them? Going into the lunch hour. That's going to could be epic. Coming up over the IB low, approaching this VPOC, which in reality is the mean. So if you wanted to be real specific and you got long down here at the bottom and mean reverted back, if you want to look at this on the grand scheme of things, this is the mean, and you'd be reverting up here to the VWAP or the mid. And that's really one of the key concepts of Tom's TLab is that you do that mean reversion kind of trade. This is a little bit of a hiccup here because of these low volume areas. So this would be a mean. This is the microstructure mean. I mean, this is would be the rotation outside edge and outside edge, and the mean would be this microstructure. But in the real big picture, this is the VPOC. Now, this column is the full session volume profile, which starts at 1700 last night. And this is the current session, which started at 0830 this morning, Central Standard Time. Both of these, everything here is Central Standard Time. And this is the volume profile for what you see on the chart. These are the levels which are pushed by IRT. These are some high time frame obstacles or points that I put in, naked volume points of control, etc. And these are the statistics, which are calculated by the statistics study in IRT. And these are my way of tracking the movement of the POC, the volume point of control. The reason being, see if I can get you an example here. As it scrolls off to the left, you don't know where it was first. You don't know where it was last. You can do this, of course. Like you can see that it was right up here, right? And then it was up here, and then it was down here. As you go further back, down here, up there, and you see, you can know all of that without scrunching the chart all up and ruining the view that you had figured out by just looking at these markers here. That's the concept of that. In this type of a market and the time of day after the big sell-off, I would be inclined to think that we're going to get through this POC and move to VWAP and the mid, actually. I'm almost to the point of putting a trade on for that. Except, well, I said earlier on about only being interested in shorts because of the context of the day. Of course, the context can change more than once within a day, and might be short all up until now. And then the context started, well, is this really too low? Have we got enough of these retail guys short? And then they drop the hammer on them and away they go. And that's a context change, in which case, the early bird gets the worm. I guess somebody that can recognize that and adapt quickly can take a bigger piece of that movement, assuming that it happens. We're here now at this VPOC. Quite conceivably, they could squeeze it back up and check if this is too high. That's called the price check at aisle 3 by Tom. I like that thing. But they're stalling out now. Another problem I have, or one of the many, I'd probably be better off listening to the problems I don't have. But anyway, for years, starting in market profile days, there's the old don't diddle in the middle. It was considered just retail stupidity to take trades off the POC, which is essentially the middle out, because the POC is by definition the highest traded point or price in the session, meaning that more trades have gone off there above and below. Obviously it's going to fluctuate back and forth, over the top of that. So the higher is probably taking a trade right around here is probably the highest possibility you have for getting stopped out or for it going the other way. Each trade, the probability is 50-50. The very next trade is always 50-50. Can always only go up or down, period. And you don't know what it's going to do. So it's a random market. But if you're down here or here, you might say, well, I think it's a little bit higher probability it's going to go up than down. So it's 50-50, but maybe in a higher time frame, it's a little better. Right here, it's 50-50, absolutely. You know, this is exactly the POC, the point of control. So that is that. And there are some trades where they'll come up that and test. It doesn't get above that. And they'll short down again, thinking that it's going to continue lower. I have a hard time using that as a springboard or a trigger or a trade entry spot. And as a result of having that be kind of a problem psychologically for me, once it makes a move and I feel like, okay, it is going to go up, then I've, what the hell, you give up entry location advantage for confirmation or something like that. Something like that's the word, is the old saying. And then there's one that says confirmation's only for Catholics. So what are you thinking about? What are you worried about? And again, if this somehow or another you had a vetted trade that said, I'm going to take every trade, counter rotation trade that crosses the POC, and you were able to define an edge for that, then you just hit the damn thing. And that's, as I've said a few times in this stream. My multi-brackets are enabled. That's the setup for the risk neutral trade. 12 tick stops, 12 tick profit on the first scale. And then the profit target there, the risk neutral stuff is a package of 2 lots. That's enabled over here, both because I initiate with a keyboard and then manipulate stops and targets with a mouse. So it's set up and ready to go, assuming that I want to do that. Now, the previous previous low, we're just touching into yesterday's low. This is the low of yesterday's regular trading session. My abbreviations are RTH, regular trading session high, low, and P is previous. And looks like they're going to take it up. Now I'm faced with looking at what I would consider a breakout. And I do think it's probably a viable trade as we get into that low volume area and head up towards the VWAP. VWAP is 5 points ahead of us. I wasn't very good about catching that at the 1 or the 2 area there.
Order submitted. Order submitted.
extremely bad placement because my stops are both ahead of the POC. So that was real poor thinking on my part. And to be honest about it, I just noticed that. But I don't move the stops. And I'm probably going to regret not doing that. But it is what it is. And you have to stick to your guns as much as you don't like doing that. Because otherwise, then this would be some random group of trades where the stops were different than the typical setup for risk neutral. They've come in on top of this right at the entry with liquidity, which is not good. And what we need to do is get up here to the VWAP, which would be our first obstacle, and that's just about right. The limit is, or the first, or the scale is at the first obstacle. And to be honest with you, I would pull it down just below that if we don't get taken out, which is highly likely that we're going to here. And we're at 11:53, so it's a little bit ahead of the lunch hour. And basically, we need to get over this low volume area here and get some traction up to the VPOC. So this is actually the wrong way around on this trade. I'm ahead of myself thinking about the squeeze being on and the context being changed. And there's the stops. So that was poor trade location. And here's the part that will be the most disappointing. Here's the part that will be the most disappointing, is that that will be the low. To the tick. And I can't tell you the number of times that's happened in the last month. Last week, twice, it took the 12 tick stop and left the 13. So that's pretty disappointing. I'm getting one step ahead and 3 steps back here. Look at that now. You see what trade location, entry location, what a difference it can make. By being here at a lower entry location, I'd have been below that VPOC with the stops, which is a big number. And I did have the opportunity to move him, of course. But that's, as far as I understand the statistics and how to do things, that would have negated the fact that that trade could not fit in the rest of the risk neutral trades that I'm trying to vet here. So I think what I will do on this trade is mark this down as a error, breakout. Now, of course, now we're going to get banged on the POC. I wait all week to take a trade, and then I take one and take a loss. Just really frustrating. Really frustrating. And but a loss is a loss. A stop is a stop. It's the cost of production, the cost of doing business. I have to question my logic and my entry there. That doesn't really fit any of my structured trades. So that wasn't a viable trade. There is no setup that is VPOC to VWAP. It's the other way around. And here we are, a classic example of what I was talking about earlier, with the VPOC being the highest traded point, and they go back and forth over the top of it. Now, are we going to get down to the low value area and revert down to the bottom? We're going to get down here and go back down to the bottom again. The hell no. And this is the IB low. So this would be basically, this would have been an IB failure, essentially, where it had gone over the IB low, tested back, and gone up. That is more, I think, I think that trade is one of the requirements for that trade. I'm thinking of the right way to say it is to be in a rotational environment, which today is not. So that was a bad trade choice on my part. This, so far, is context is lower. Now, what's it going to do? Don't know. Frustratingly, I guess it's one of the things that eats on you psychologically when you have to watch other people trade setups that you recognize and trade them successfully. Then it makes the FOMO or the anticipation or the frustration greater. Oh boy. 12 o'clock. And look at them. Just dancing on that POC. And if you look at the day down here, now this red line at this point over here, the POC was not down here. The POC, the line to watch is the yellow one, which is the developing point of control. This red is the actual point of control, but in this first 2 hours or hour and a half, hour and change, the POC was up here, right? So they traded down to here. The POC migrated down, and that was a great classical TLab structured trade, and that's the VPOC migration, and down you went. Also, that took out the IB high. Took out the IB stat, which is another one. So you had a compound here. You had the VPOC migration targeting lower as the IB stat, and then rest is history again. And I suppose it's just a matter of frustration or FOMO, or wanting to get this section figured out. Still not sorry that I've changed my philosophy and strategy to the risk neutral, using the book map and the volume profile. It's been kind of hard to go from it being fairly profitable to not. And now look at this crap at 12 o'clock. They start looking at the squeeze, right? So irritating. Maybe. I mean, one would imagine that they're going to get up to that one would imagine there's the value area low from yesterday. So that could have been it. And I frankly didn't notice that. This is the value area low from yesterday. It's quite conceivable that we may stay rejected out of value. And then again, and so it's a trade-off of POC up to value, up to the VWAP. Yeah, I think this is a real bad situation for me to be involved in. And now, of course, I want to get that. You can't help thinking I want to get that loss negated and evened out, right? Looks like value is holding them out. Part of the gap rules is that, if you get into value and are accepted, it's quite often that you'll trade all the way across that range to the value area high. Whether that's going to be the case here or not, that's another story. And often at VWAP from below, retail guys will sell that and it'll pull back again. Now, what's it going to do? Pull back down to previous low with the POC just below. I don't see any real spots to think of a great entry here. So I'm a little bit pretty disappointed with that. My temptation is to take it long here because I've got a nagging feeling about a squeeze. And once they start, it can be pretty fast. But, VWAP, value area high, blah, blah, blah. Those are all disaster points. Here we are over value coming up under the VWAP. Got the mid up above for that famous area at 4,800 living down there. I don't know what to think here. I really don't know what to think. Well, I guess I should have been thinking higher. My original premise, right? My premise right here. And there was the scale. So we would have been scaled and risk neutral. It's just a matter of timing, man. Timing is everything. Instead of this entry, wherever I went, instead of this entry, it could have been here, 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 and wow, well over the well up to the target, and everybody's happy. out of 1202. Go figure. Go figure. And what is there that make them turn around? Nothing. The entry location and the decision point is so important. If you get in here, right, because they got, okay, it's broken through there and we've got sellers going on, you've only got 4 points to the target, and your stop is well under these highs in the VWAP. So there's about no part of that that's any good that I can see. And we've traveled a long way off the lows of 75 or whatever it is, 70, 72 quarter, 30 points off the lows. Just taking the test of the developing value area low would put it in at about 20 points. So hindsight, RMT, rear view mirror trading. Boy, is that clear or what? And now the trade, the TLab structured trade is in this context where it's a down trading day, VWAP to VPOC. Will that pay out? Let's see. It's the 12 o'clock thing that bothers me. They're liable to do all kinds of shenanigans in that hour. But it is definitely a TLab trade. For some reason, I keep having a feeling that it's going up, and that's not normal for me because I'm pretty much of a short seller, typically. I'm just thinking they're toying around up here, and it's a 12 o'clock story, and they might want to squeeze out a handful of shorts. A lot of liquidity just in the book since that last test up right here. You want to look at what would be considered exhaustion. There's 29 stopped out here, 1 stop out there. Not a lot of shorts up, not a lot of short stops above or buy stops above. Well, they took out some of that liquidity with some trades up there, buyers. But who knows? There's buy-side liquidity at the 4805 level, which is value area high, pretty much. Developing value area high, 4860 change, 6/4, I guess. That's the swing high for the drop on the day. But they keep throwing the lid back on over here. Putting the lid on the pot. I'm not sure just what to think. I keep thinking they're going to want to take it up. But I thought that before, and I was just too damned early. Had I not taken that at the location I did, I would be extremely I wish I was long hair. 92. No. I had the right idea. I just had the wrong time. Wonder if that's going to be the case again. Hmm. And I suppose the conviction of the trade would have been to re-enter on this test back down here. But that's off the POC again. Now, this is a breakout trade, which I don't like doing, and it's right at 4,800, which was a pretty big low. But I am thinking that, too. I'm thinking that the mid, high volume node, and the developing value area high are likely on the table. I think I will watch here. That 4,800 has been way too big a number for a long time. I'm disappointed that my initial premise was wrong or was just too early. Or my stop was too tight, however you want to say it. But, that's that. And here we go. Exactly correct. Go up to the mid and probably developing value area high. And I'm standing down here looking like a dummy with a stop. But this is 388. Would have been would have been a 6-point stop to capture that move. you know, that's the problem with hindsight or RMT, rear view mirror trading, is it's so easy to go back, go, well, yeah, okay, so I took this, I saw this down here, exhaustion, and then, you know, all of those things that sound good on paper and are real easy to spot in the rear view mirror. Down to VWAP, likely. And the context is still arguably down. So, you know, there are swing ups, but, or pullbacks or whatever you want to call them. But at this point in the day, I'm a little bit hesitant to, for example, now this is a VWAP to VPOC trade, if in fact it happens. And I guess the thing to do would be to take it and then see. At value area low from, they're back inside of value. I keep missing this value area over here. This is value area low from yesterday. They're just dancing in and out of value. Quite a very verified statistic is that if the price is accepted in a previous value, extremely high likelihood that it'll trade all the way across to the other side. This is typical retail behavior. As price approaches VWAP from the top or from above, they'll buy it. And I'm thinking sell it for the POC. Not looking real good there though. I suppose the short was 48. It's only that's the problem with this. I get this thing wound in too tight, and then it starts looking like something. You see, short in 48. This is only at 47. Two down there, yeah. Off the VWAP and up again. You see. And looking at the wrong numbers there. Yeah, so VWAP is being stubborn. And I really have no clue what direction I would think that thing's going to go. 97 and 99 is 2 points. 98 was 3, so there would have just been a scale, barely, maybe. If you got long down here, barely scale up here. It's just so irritating to be essentially correct in direction just early. Don't know what to do about that, actually. I'll take a screen snap of it, though. There we go. Yeah, it's pretty frustrating. And I mean, not only just right, but, 92, well, 8 points. That's not exactly over the moon, but it beats the hell out of sharp stick in the eye. And I have no confidence now on which way this thing is heading in. It's the noon hour, so it's noon 30, right? Typically, it's VWAP to POC. Considering the context of the day and the way big short down, it's the balance, floors out, balances out, brings it up back into the POs, into the IB high, back down, back up again. So almost confirming an IB failure. And all of these shorts in the market, or at least all of these guys short in the market. Some of this took these people out, for example, but above the swing high there at 805, I guess you'd have to imagine that it's going to go higher now. I really don't know what to think. Maybe just don't. Problem is, if I just don't, I'd go do something else or change my concentration to something else. That's not helping my trading at all. I don't think. If that's the case, I'll just close the accounts and go somewhere else. Stop watching the damn thing. Stop being frustrated. Maybe that's the trick. This last month or so has just been that kind of thing. It seems like it's one step ahead, two back, which is kind of annoying, to say the least. Yeah, I don't know what to think about what they're going to do here now. A lot of liquidity parked up there at the mid. Blowbacks. VWAP is just above that. But the developing value area high is up here. 7/4 about. I'm sorry. 6/4. My inclination now is to go take a nap. But that's how 2 or 3 days this week. That's exactly what I've done. Only to wake up and find that a giant move happened. This is looking kind of like somebody's going to get shook out here. Now we're doing the zipper story. That's what FT71 calls them. you look at a Renko chart like this one here, see how it looks just like a zipper? Boop, 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 boop. It looks like a zipper on a pair of pants. A consolidation, obviously. And that's this area right here. Came up into it, boom, 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 boom. 81, 801.97. So 4 points if you're no range, not enough range at all for a trade as far as I would be concerned. And with this kind of action here, I would be real leery to take this VPOC or VWAP long with all that selling and no real trigger that I see there. No, I don't see any numbers on these guys here. There we go. So there's 9 there. What do we got over here? Nothing. Doesn't show anything. And man, nap is sounding better and better. I'm not sure what I did or did not get on the stream there. May have been talking into a mute mic. I'm not sure. What I was saying, I'm not sure whether it made it or not. Now the school's back on. I have a school run, so I leave about 14:45. Won't be participating in the closing stuff now. Okie dokie. What are they doing now? Well, smacking that VWAP a whole bunch of times. Huh? Getting everybody nervous there. That zipper's getting bigger and bigger. I guess that, at one point, it'll go somewhere. The liquidity's lifted off now above. So the mid is just kind of sitting up here all by his little self. I would sort of imagine that it's going to head that way at one point, but, it's arguably, we are arguably still in a context south downtrend day. Now, this little bit of nonsense right here into noon, but still not above the swing high. So I think technically we're still down. Having said that, of course, it's probably going to take this VWAP to the mid, which is 5 points, and then squeeze them up to the moon, Alice. We'll see. Well, I'd have been a lot better off if I'd have gone and taken a nap. Let's see here. Hell yeah, 11:45. 11:45. I should have slid right into Betty Bye. Or just been a little bit later to the party and gone, yeah, and then I'd be up to here. So see how it works? I'd be up 10 points. Well, almost. Incredible, isn't it? Timing is everything. Boom. Pretty crazy. I'm not sure that there's any way around that. Now, there are those who just say, well, you got to keep probing the market. Well, how many probes are you going to have before your account is belly up? I think just slapping trades at it. I guess I don't have the haven't worked out the nuances between over trading and slapping trades at something and probing the market. And I'm not belittling the fact that those who do that, and maybe it's all about account size. If 2 or 3 stops is significant, and for me it's significant. I have a thing in my mind that if I take 3 stops in a day, I quit trading because it seems like something ain't right. And if there are those people that take, 4 or 5 or whatever it is, or and then finally get one right, you got to get one. It's got to be one hell of a right in order to make up for 4 or 5 that aren't, I guess. Even in this context, this is only 97 to the century figure, 3 points. You'd be scaled, but you're straight off of VWAP. And you're looking at VWAP to mid and the POC is below you. So that's ass backwards. Typically, the sequence is mid VWAP POC. So I guess I'm just all backwards this day. And the minute I go give in to my yawning and lay down for a little bit, I will, it'll just break, of course, like usual. These long days get kind of wearing on me. I don't ever sit down. I have 2 standing desks and I never sit down ever when I'm working. And I work from about 6 in the morning until around 9 or 10 at night. So, 14, 16 hours a day doing this and my other consulting. Lived in Kuala Lumpur for many, many, many years, and trading was great from there. Had a connections through Singapore, so lightning fast connection. Not as good as here. I will say that. Here I've got 1 gigabyte up and down. It's about 984, 9 and change, over 950 Mbps up and down fiber. So that's that is quite good. But in KL, the time was what was wonderful because the market opened at 21:30. All of the day, the family, everybody was, quiet, calm. I'd had a day of doing whatever I needed to do, including a big workout in the morning. And then I was able to focus 100% on the trade, which was great. I'm having a hard time getting used to this. We've been here about 1.5 years, going on 2 years. Maybe we moved back over here for other reasons. Settled in the central time zone and have good fiber. But the problem is somebody meeting at 9 o'clock, or I've got to make a presentation at such and such. So it's, and that morning trading hours are for me. I'm starting to look at either end of London or maybe London session or something, which is I've never done before. I never felt that those sessions were even remotely as lucrative or as liquid as the regular trading session here. I have to change my charting all around too, I guess. But in order to find a time when I have just uninterrupted, be able to uninterruptedly focus. I think I don't know whether it's an excuse or not, but I think that's having an impact. Yeah. these VWAP tests up, I guess, were the idea. So now I'm getting pretty over this crap. Well. I hate to be late to this party, but I am still thinking that there's a loan available here. Interestingly, the liquidity that was all piled up downstairs has moved up. A lot of stuff was piled out over here, has moved up here now. They've tested this VWAP a bunch of different times, but only across the noon hour. And yet to make the mid. Well, the noontime doldrums. And I'm unfortunately got triggered just about 15 minutes ahead of that. So, on top of wasting a perfectly good nap, I'm sitting on a stop and now vigilant to see what comes next. I'd say that without any question of a doubt, they're going to slide up there and smack that that mid. But that's what I thought about an hour ago. And and when they do, chances are extremely good, in my opinion. There they go. That the stops above there are going to get taken out, which they just were. 715 of them right here. Now, the question is, they're going to get up to the developing value area high and put a squeeze on? Or is this just been a lunchtime light liquidity or light volume, trading opportunity for the higher time frame people? And, it's a great time to pick the pockets of a bunch of retail guys, I guess. So I would have been extremely well placed and happy with my trade if it would have been about 10 minutes later. Timing is everything. Timing is everything. Now, are we going to mean revert? We're up the mid, low volume area, VWAP, VPOCs down below. Are they going to mean revert down to there? Or are they going to get a squeeze on them and take it to the who knows where? Upper levels, price check, aisle 3 at around whatever that is, 27 or something. Yeah. So here we are. There's this price check at 27.5. Are they going to take a run at that and put a squeeze on everybody? I'd say that's a highly likely possibility. That's kind of what I was thinking about when I put the trade on that I did right over here, but I was just way too early by about 3 ticks. Right here. Boom. Clear sailing without heat all the way to the top. So incredible. I mean, amazing how that happens. So there was a mid penetration, tested back to the mid. Now they're through the above the developing value area high. Likely going to get up there and put the squeeze. I'd say they already started. Looks to me like. So there is essentially swing high. Easily seen, sort of easily seen. Go on. Right there. Drop down, swing high. This was the beauty here. This was the migration, and then the V, and then the IV low. So that was a real nice trade. What I'm cautious of, or leery of, or sort of halfway assuming is going to happen now is a squeeze up to check this 27.5. And that kicked the developing value area high way up to the next swing area. That's pretty interesting how that worked. So it kicked the developing value area high from around here, now up to here, which is just at this swing high. So kind of bouncing from that one to that one. That's kind of interesting. Unless I'm hallucinating. I mean, this developing value area high was down here. So definitely did that. Hmm. So I'm so happy that I was 10 minutes early and, and stopped out. Jesus, that's just really incredible. I need to listen to myself, I guess, more. Maybe just stop looking at other chat rooms completely, I guess. Every now and then I glance up to TLab because I do. I try to pick out Tom's tweets or whatever he calls them, whatever you call them when you enter something in a Discord chat. I guess it's a chat, I guess, or a text or something. This test of the mid, I don't know how anybody could say that was a reason to go up, but we're definitely well over the mid, and the downtrend context is pretty assuredly changed, I would say. Or I would think. I mean, by definition, we're damn near 10 points above the mid, so it's not a downtrend anymore, I guess, is it? You know, I don't know what technically, how to technically look at that, I guess. We took out the buy side liquidity at this swing here. Took that out right there. Boom. And when we got all those stops, now the developing value area high has moved up here to this top of this next swing. And we're pulling back just to the bottom there. And will they take that one out? And then they got the next one, and then they got IB high. You know what I mean? Who knows? It could be none of those are vetted trades in my book, or structured trades, or any other kind of trade, actually. So, got no business looking at them, I guess, in reality. Yeah, so rest assured then that if I step away, this thing will either go to the moon or Acapulco cliff dive. And I would like to get some clarity. I don't think that as in reality, I can't imagine any structured trade that I would have, except perhaps a test of this developing value area high, meaning that we have, as I mentioned, we're accepted in value both today's and yesterday's, and have traded all the way across it almost. What they will do now is another story. It's 5 after the hour. Wow, look at them jam in on there. Interesting how the liquidity dropped in on the top, right? Put the lid on that pot in a big hurry. So what are they trying to do? Are they trying to get some more people to buy into them? They're trying to sell into these guys ahead of the developing value area high. And the question that always enters my mind is, so what are they doing? Are those longs liquidating, which is very possible by selling, or are they shorts initiating, which would typically be higher time frame? Obviously, if it's the higher time frame liquidating, taking profit, your next step would probably be short. And if it is shorts initiating, then they're looking for shorts. They're looking for south. That's the big question that I've not figured out. And I kind of don't think anybody else has either, except maybe somebody on the, some secret handshake that knows how to get in the back room and see the stuff or whatever conspiracy theory you prescribe to. So now where the hell are we? Way above the mid. Which is clear down here. No, that's VWAP. Here we go. There's it. I was going, wow. Where'd that go? And below that is the vpoc. Yeah, I don't have a feeling for where it's going to go, to be honest about it. I don't have any feeling or any real structured trade setup. It's right in the middle of no place. There's no real, anything around. There's no level. There's no liquidity, and it's selling off. So that sort of fits with this liquidity and the lid on the pot, and then they're selling it down. It would undoubtedly bounce at mid. That's a very, very common retail trader behavior. If it hits the mid and or VWAP, it would bounce. Taking that trade into the mid is nothing that would be on my radar. But here they come. Let's see how they react at the mid. Man, I can't stop yawning. I'm going to have to go have a cup of coffee or take a nap, and I'm pretty sure it's going to be the nap's closer than the coffee. So a quick one, other than stand here and be abused. It's so frustrating, you know. That's one of the great things about streaming this is now I have a complete visual, video, and audio record of what I was thinking and around that trade and pick it to pieces. What the hell was I thinking about? I'm sure I'm going to go, what? I'm sure it will be a FOMO situation. It's like, all right, already, enough already. Let's trade, you know, which is absolutely the wrong thing to do. And I don't trade very frequently at all, so I don't succumb to that often. I might only not take a trade in a day for whatever reason. Like, you know, this morning I was not able to focus on the period of trading that I'm interested in. And oftentimes I won't have anything to do with it. I mean, I'll watch for sure. And probably had I not started the stream, I wouldn't have taken that trade because I've kind of made it a resolution to myself that I won't take any trades off stream. There's one that I took at the spur of the moment in a closing swing trade. And at that, before I closed anything off, I replayed Bookmap, which captures all the trades, you know, lines and all the movements and all that stuff. And I did a voiceover and then identified it clearly as a recording of a live trade and uploaded that and put that stream up. That's the only one that I've taken off the stream. And that was a big, you know, exercise, pain in the butt. So don't want to do that anymore. Close to that mid, baby. You know, and there's 4 points or so, three and a half. So could have taken this swing low. Scalpy boy is having a grand old time. Take this swing low, get out with 2 or 3 points, take this little high up here and, you know, run it down to, what are we at? They're 11 down to 4. So, you know, 6 points. That's good. From a scalper short-term mentality, as opposed to the long-term higher risk reward type trading of risk neutral, which I think at this point anyway, to me makes logical and all kinds of sense. And that's what I'm going to stick with. There's a lot of people that, you know, do active trading, scalping, whatever, and have a great trade plan and a great success, and good for them. I've actually traded that way before this and had a fine time. But I think in the long run that the potential is greater. The less times that you expose yourself to the market or you expose your capital at risk, obviously the less risk you take. Makes sense, right? It's by definition. So the key to the situation is, if you're going to take few trades, is to have a greater risk reward. You know, if you have a 3-to-1 risk reward, for example, on average on your trades, and you stop out, okay, great. You know, that's 1 of 3. You're still net ahead, and that's how the account's got to build. That's why there's got to be more asynchronous trading, or more focus on entry levels, so that there is the potential for that reward. 1-to-1, you're going to get hammered. If your risk reward is 1-to-1, you're going to get hammered because it only takes, you know, a couple 3 losses in a row, which is very possible, and you've, you know, lost a lot of ground. Because if you take a loss, you got to make 2 wins to get even or to get ahead. So, you know, that's tough. Right now, I would have to take 1 good trade with a high, at least 2-to-1 risk reward to be even on the day and one trade ahead. If I had a 1-to-1, I would just be flat. So, assuming that I take another trade and then it's positive. So that's where that's at. And maybe I'm not thinking clearly about all that stuff, but that's how I'm thinking now and why I'm narrating it so that I can have that possibility to go back and look at. What I question now is that this thing's going to start shaking loose and getting some I think, it's quite possible that they're done until we get into the closing stuff, which I won't really be able to participate in. They've had a big down move. They've shaken out more than half of that. So, big successful day for a lot of people. So I hope that last conversation was not in mute. I'm not sure whether it was, but anyway, just quickly to recap, in case I was saying maybe the day is essentially no more, major moves until perhaps the closing swing. We had a big down day. What is that? Crying out loud. 48.28 to 47.72. So 40 points or something. And then back up past half. They got a lot of them. They took a lot of money short and they got them covered out. And they may just kind of fluff around out here until the closing swing. Never know. Never know. $130. And I don't really think this is a place, this is not typically someplace to engage. This is like the middle of space, right? There's no levels. I mean, sure, there's this microstructure crap, but that's just what's on the screen. There's a low volume area here in basically a trend, extremely light volume trend area. There's some liquidity way back over here, but was it serious? Not really. Is this some place that we're rotating around this number here, this low volume node? Maybe. But essentially, this is in space. It's not at a level or a high volume area or a value area or a liquidity area or something like that. A known level like the mid or the VWAP. So essentially, it's probably a pretty stupid place to be trading. Back to that low volume area and the previous liquidity. If you look left, always look left. Here, this liquidity jumped in here. They were sitting over here. They lifted. They pulled down through it, jumped back on. Minute they came past it, lifted right off when they came up to it. So that's got to be some jerk off, just playing around, I guess. But it seems to be a relatively significant point. Back to here, back to here, back to here. That 7 area. What is that? No, not. I was thinking it was. Well, it was. This was yesterday's VPOC, so that's fairly close, I guess. But that's, clutching at straws. So they're back down at that level. Let's see what they do. They're pretty proud of 13 and 15. That doesn't seem to be any question about that. And they've been proud of that for quite a long time. 13's been there for donkey's years. That's the it does go away over here, right there. But this is the price check at aisle 3 I was worried about. Now, if you scrunch it all up, it looks like it's pretty close to the mid. Until you wind it out a little bit and see that it's not as close as it might appear. At the NVPOC, we got the mid down here. This is the Globex VWAP. This is the Globex or full session volume profile. And there's the VWAP for that. So whatever that means. That line seems to be mean something to somebody. Right here. I guess the previous day's POC is close enough for him, I guess. That's what this level is right here. So this is just getting kind of annoying to me, and it may not do anything until just 2:30ish or something, and I won't be able to have any participation in it, which is pretty irritating. I could think of something else to do. I would like to put one more on just to level that out. That is always irritating to put the day on a loss. But it's that's another reason for treating trading as a business, a statistical business. And once you have an edge for a structured trade, take as many instances as that trade presents. Because then your data set or your sample set becomes, as it becomes greater and greater, it's just a stop is 1 out of 1,000, rather than 1 out of 2 or 1 out of 1. Here we go. Little squeeze a Rooney here. Yeah, I have no idea what they're doing. And I probably I guess here's that squeeze I was talking about. See what happens at 13.5. And who the hell knows, Well, somebody does. I guess just not me. So we are, well, that didn't take very long. Didn't take long to test that liquidity out. Had been sitting in there all day. So somebody must have gotten short somewhere along the line and then just put their stop up there and said, here, you come get it. Their target, I'm guessing. And above that is developing value area high, and above that is something at 15 they're pretty proud of, and previous naked volume control a little above there, and value area high, and lo and behold, 77% for settlement, which isn't settlement. It's, I think yesterday's mid or some close or some damn thing. I don't know. What is that? Let's see here. Overnight mid, really? Wow. That's kind of amazing. Now, what does that mean? Does it mean we're going to short off of that thing? Does it mean we're going to squeeze up? What does it mean? That's what I don't know. I know that would have been a great little long right there for about almost 10 points. Keep hitting the mic with my hand. Shorts, counter rotation. So here we go now. What are we going to do? We're going to bust up through there, get value area high, settlement, blah, 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 blah. Squeeze them right out. Or what? I certainly would love to short, but I'm not so sure that that's the right idea. Not so sure that that's the right idea. I'm not sure that along is either, but you know, that liquidity at 13 seemed to be a pretty firm line in the sand. And the developing value area high is just a squiggle above it there. They seem pretty intent on this. These are levels now that are somewhat, it's not just out in space. We've got this liquidity level here that did trade out at 13. Developing value area highs right here. Got a high volume node from the MC down here. A previous naked VPOC and the value area high from yesterday. 17. Then we've got all this other crap upstairs here. This is the VPOC from the overnight. This is the VPOC from, well, this actually needs to go up a little bit. Should be at that line right there. I got this the wrong spot. We have that. And then we have a previous RTH high, a couple of initial VPOCs early on the open. Yeah. Probably going up. And I'm so glad I got stopped out of that loan 5 minutes early. Amazing. Truly the magic of trading. Don't know what to do about that, actually. I would not be shorting this mess, so I can tell you that right now. Strong buyers into the developing value area high. Bunch of sellers didn't get much over here. I want to step away here for a few minutes, and then it'll obviously take off to settlement. Well, what happened here? Ooh, look at there. Boom. Starting to get the jumpy, jerky stuff going on around. Coming up to 2 o'clock here. And absorption. Well, actually, what that is a whole bunch of stock. 247 icebergs hit and cleared out 2 levels of prices. And now we go, where the hell do we go? Up, up, and away. 73 settlement, 17 half, value area high. Many places up here we can go. Here's yesterday's trade. Here's today. We took a peek above, and it was sold off till 10:30-ish, 10:46. It's been up ever since. $15 to $11, so it's 4-point swings here around this little, whatever the hell this little thing is, microstructure, schmap, I don't know. We got at 12,000. Is there 12.6? Where the hell is VPOC? Yeah, it's not too far away. 14.6. Not too far. They could actually swing it up there. And unfortunately, not able to go grab a rest here. There's only, if the way these vpoc migrations can be understood, there's 12,705 contracts right here. Go down to the vpoc, excuse me. and there's 14.6. So there's 12,000 and 14.6. 2,000 more contracts or less, and the VPOC migration is going to migrate way up here to current price action, essentially 12.75, 12.5, whatever it is, 12.5. So that's how that works. It's not mystical, and nobody's got some secret powers of understanding the market. It's just numbers. People post like that, like the psychic VPOC channel. Yeah. The more you drill into and understand about this stuff, the more the simple analogy of a trading business based on statistics and the casino analogy resonate with me anyway, because it's really what it is. And I would be real curious I'm sure it's somewhere, what the statistics or the edge are for like 21 or one of those games. Each and every game that a casino plays or offers to gamblers has a pre-calculated, very well-defined and statistically verified edge. There's no question about it. Here we go to value area high, and that level at 17 quarter-ish, whatever that's there for, I don't know. Or maybe they're just trying to front run the value area high, I guess. Boy, I'm sure glad that my long at about 47 and change got stopped out. Damn. Wow. Wow. And I would say we're going to head for settle. And who knows? Whatever it was that lifted off with only 187 contracts or something traded into it. That doesn't make any sense. How would that be a sell iceberg? It'd be down here, I would think. I guess maybe there was a sell iceberg right there also, and the buyer kicked him out of town, I guess. I don't know. Got me. And now we're out of an area where trading makes any sense. 1675 and a whole bunch of liquidity levels hanging out in the middle, and the target number up there at 20. So, that you got to be scaled ahead of where? Ahead of this one? Ahead of this one? Ahead of this one? Maybe this one. That's stupid. I will end this day off as it is, I'm sure. Unless some dramatic move happens. I'm able to just jump on and quickly ride the bus, which isn't a structured trade and would kind of be counter to the plan, but oftentimes works okay from my older life. Going to take that settlement out. Going to take that stat, which is it's overnight mid, actually. Yeah, that is definitely a squeeze. All those people that all morning long were so tickled about getting short are now standing there with a dumb look on their face. And some made money. I mean, some made good money that got short and got short and covered. But the ones who didn't, I don't know who the hell that would be, to be honest with you. I can't imagine any retail dork holding through all of that. Maybe they do. 2:00 coming up here, 1400. I'm one sleepy cowboy, I'll tell you that.
Order submitted. Order submitted.
Whoops. Yeah, late entry there. I was kind of asleep at the wheel, but we'll see if this pays out for that. What I'm looking for is a target down to this high volume node here, or this microstructure thing. This price where we traded a bit. We'll see if it goes that way or not. And of course, the second it just dies. It's really, truly amazing. I am just, I guess, asleep at the wheel enough that I don't, I'm not getting my entries in right. I'm wondering if this needs to be just above that. Or not. Let's see here. It reacts around 13. I think I'll go just above that.
Order submitted.
And then, of course, it'll probably flop right through it. Yeah. I might have just been too late. Day late and $1 short, just like before. And now it's just horsing around here. The entry was just too late, fortunately. But we'll see if we get risk neutral. And if so, there's some serious thought to taking them both off here. We're at 204. Need some sellers to hit in here. There we go. Okay, now we're risk neutral now. You see that by moving that stop, the break-even line has moved. So I've got to bring this down here to break
Order
even.
submitted.
Now the worst that I can do is scratch. So, not that that would be a good thing, but that's a very good thing that I moved that up from this low volume or microstructure high volume node right here. And if they are able to get down here and trade some more contracts around this thing and get that VPOC to come up there, then it's very likely that the thing will rocket the other direction. I'm kind of hoping that they get down there and want to trade some more onto that. Actually. But again, the worst that I could be is a scratch. And if I pulled that up somewhere or another, I could actually get cover up a bit, right? Boy, the minute they're hitting that, that's getting bought up for whatever particular reason. This is essentially a POC, and I was kind of looking at a mean reversion, which I was hoping would get down to this level down in here, but I may be just wishful thinking. And again, some bomber could come in there and that thing could just drop like a rock, That's also a very good possibility. Pretty high volume area there, kind of at the POC. Not really, but this is what I'm talking about here. Here we are right here, right? So this is the POC. Let's get some of that 2 o'clock magic on this thing and pound it. That ain't exactly pounding it. That's just a bunch of crap on it. What they're doing is they're bringing this thing down here and getting more volume traded in there now. Another couple of hundred, another 1,000 contracts, and the VPOC is going to shift up. And that's going to be not fun. That would signal basically that would tell me that the price was going to go up, and would give me the impetus to get the hell out of Dodge, hit the eject button here. Couldn't get any sellers on there. I'm thinking that's about ready to hit the eject button anyway. If I can get down past, I'm 2 up here, get down to about here. So now we've pulled the VPOC full session down. Oh yeah, that's not looking so bad. And now what I'm going to do is bring this right here.
Order submitted.
So the worst that I'm going to get out of this is a scratch, and probably.
Order submitted.
I would be even, I think. Just because of the time of day and because I have to go. Now that's taken out. Okay, so that's crowding that too low. But I was able to compensate for these two that I moved up ahead of this VPOC once upon a time. And essentially then that was a 2 lot off at the first scale. So I will we'll keep an eye on this and see how see how it turns out to the target and or lower, Yeah, it's going to get down there and do it. It's just I was not in the mood for it to blow back on me, and as it turns out, it would have gone to target and passed. So there you go. That's what happens when you get paranoid and don't trade properly or react properly. I was too concerned about trade management to get even, and look where I'm going. I've now given up 11, 15. There's 5 more handles that I've missed out on by moving that trade. Had I left it here, or 1 tick, 2 ticks, left it here, and then move this one out as we came through here. Okay, now we're, hindsight, right? RMT, review mirror trading. It's magical. But that would have been a 2-to-1 or more than 2-to-1 risk reward, and substantially better than now I'm just flat on the day, essentially. Or damn close to it. One stop and one not so well managed risk neutral trade. But risk neutral from here. And then a little paranoia brought it down there. And I should have left it there, I guess. And I would have easily had my 24 tick target right there. But hey, you know, better than a sharp stick in the baby. Oh, damn, and I didn't think about either of these. So that's 322. That's probably about 0210, 312, I guess. I got to go back and put the chapters in this thing. I always forget to mark down the trade locations in, out, and all that stuff. And I have to go back and review the stream, which is okay. But rather than just review it and concentrate on the stream, I take notes and I have another window open where I edit the chapters on the YouTube studio. Yeah, anyway. All right, then where are we? What's going on here now? Test it up to that. This is the starker one. If we're around at the front of the stream, I think I did describe this, try to at every stream. This is the full session volume point of control, which is this right there. So this is the full session volume point of control. Now, the current session is this one, and it's going to shift up in about 500 contracts, assuming they get up there and trade it. I've been noticing a lot that this full session VPOC has significant impact often, and or acts like a magnet a lot, as much if not more as the regular trading hours session. But I haven't had the time to get on IRT and set up a RTX thing and do the statistics on. I haven't even thought really about what the statistics would want to measure for it R. But here we go now, up and down twice past my targets. So a little bit of a, oh, and now it's going to go lower yet. How low can you go, baby? How low can you go? Yeah, so well, looky there, another 9 or 10 points. My goodness, that's just stupid. That's why I'm not. I mean, I've got to get over that. I've got to get over the personal connection to the stops. Like I was obviously fixated here on. I mean, this is an okay. I believe this to be an okay adjustment of the first scale target because it does make sense to get just above the at or above the microstructure VPOC, POC micro, which is here, high volume node, which I did. The problem is the fear of not of giving back and not covering the loss because I attached to it or whatever, you personalize it or whatever the hell you call it by this price or trade management. One thing to bring it down here, actually the place to do it is leave it at break even, which it never touched, right? And still hasn't, for that matter. But if you want to actually properly trade manage this, well, you come down above these swing highs. Then you could come down to this swing high. Now, you would have hit your target here, or you could have extended the target out when you brought down to this swing high, instead of crowding up here to ensure that I equaled out that stop from before. So that's something that I really have to get my head around and be cognizant of and recognize. don't internalize those stops, and don't over manage the next trade, the next profitable trade, obviously, to compensate for that, because I've now given back, lost, but well, it's 9. It would have been at 9, and had I been, running this down, it would have been down here to around 6. So substantially more profit, substantially better risk reward. Picked out a target and gone for it instead of fluctuating all around, waffling back and forth. I guess that's the way to put it. So I have to, I'll close the stream down here at the bottom of the hour. And then I'll make sure I walk away and don't trade. I guess I'll let it run until in case I do for some reason, like the closing swing trade starts to kick in or something. But this is not a situation where the closing swing trade or the 12-to-1 trade would be applicable, because it's basically been a giant rotational day. Here we are. On and up. So, but in case some particularly goofy move starts to happen and I have the impetus to jump on it real quick, I don't want it off stream. I want no trades off stream. That's kind of my goal here lately. I mean, since I started streaming this thing. So I guess I should have started some sort of combine or something at 0 when I started doing this, and then have an absolute record from 0. Didn't think of that. That's a dumb idea. I mean, that's dumb. I should have thought of that rather than just trading on my existing stuff. Well, anyway, it's too late now. So I will continue with this until the bottom of the hour here, and I can't imagine they're going to mash it too much. They might. Who knows? They may take the damn thing. Seems like it was a IB continuation in the last 20 or 15 or something minutes yesterday, if I'm not mistaken. Yeah, you can see it right here. So there's an IB failure in the last 15 minutes. Boop, boom. Now this would mean today they could conceivably go neutral by running it up through here. I don't know why that would matter to anybody, but you never know. So it's a possibility that there could be some dramatic action. really incredible how a huge drop, and I hit into it, and the second I hit into it, it stalls out for a while and then goes down, comes back up and tests. I mean, that the problem with that is a late entry should have been right there. That's my problem. I think that I've noticed in my commentary on all of my snaps for my journal, late entry, late entry, late entry, and it's obvious to see. I also type it, but I think that's probably one of the bigger problems. I don't have any problem holding stops or moving stops. I never push a stop out, any of that crap. I always take the stop if it's there to be taken. And I do have a problem, as I just discussed, by trailing up too tight to lock in profits, especially when there's been when I'm looking at a loss, I want to get rid of it at the end of the day or something like that. I want to even one out. Otherwise, I would let it sit there or bring it up to break even, or this is break even, or bring it up to the entry. Not tight like this, which would have given me the second target. And had I been quick enough, move that down and let it see where it went, Woulda, shoulda, coulda. The joy of trading, the magic of trading. So 229 comes 230, baby. Usually 250 when I will not be here is when the big into the close market on close orders and all that crap start banging in, and a lot of liquidity comes in, and there is frequently substantial and violent movement around that time. So I think in order to get ready for my school run here in 15 minutes, I'm going to shut the stream off. I'm not going to attempt to make any other trades, because the last thing I can afford to do is get into one and then have to get out of it for some stupid, because I have to leave. So this is discretion being the better part of valor. So there we go for 11 January 24. Stream with 2 trades, one stop and one risk neutral. And I'll get those straightened out in the chapters.